Good afternoon, traders. Welcome to the weekly Tesla update video. And right now I'm looking on Tesla in the daily time frame. So this teal looking line is our guide, visual guide for the wedge. So this is resistance and this is support. So you can see we have 1 touch, 2 touch, 3 touch here. And so far we haven't tested it again. And for support, we have 1, 2, 3, 4, 5, 6 here. So the most key thing is that earnings is coming up Wednesday. That will dictate if we do break bear into this wedge or we break bull above 186.919. And usually the most likely scenario for such a big move up and down, then most likely is a equilibrium, meaning it would tighten up itself into a key fundamental data, which is obviously earnings coming up. So we can zoom into the 4-hour time frame. And give me a second here. I'm just gonna drawings. And you can see here we cannot get over 186.19. We have rejected here once, twice, 3 times, and when we're over it, it becomes support. So resistance becomes support, support becomes resistance when we're depending on where we're under it or not. And then now we are back under it, so we cannot get over. You can see all these wicks. We just cannot close above it for the day. And even with the 2% day on NASDAQ on Thursday, we only moved up roughly 2.8%, which is not unlike which is not like Tesla, because Tesla usually has a higher beta, meaning it moves both ways more than the NASDAQ and QQQ. So if QQQ was up 2%, usually Tesla would be up 3 to 4%. So this probably could be because earnings are coming up and the bulls are just holding this uptrending line support until they see the earnings data and decide if they wanted to break this bullish or bearish. So we'll see. It'll likely just tighten up around this area on Monday and Tuesday, and then we'll see the earnings will be after hours on Wednesday. And that's about it for Tesla. And there's not much going on as of now. It's more so sideways. So we'll just have to see how the earnings come in, and I'll update you guys next week. And see you guys around.